The traditional sport economy operated on a simple, linear financial structure. An athlete performed on the field, collected a standard playing wage from their club owner, and retired when their physical peak declined. In this old framework, wealth generation was strictly bound by age, physical health, and the limits of a single playing contract. Today, that old model has been completely obliterated by the global endorsement economy. Modern marketing contracts have transformed top-tier athletes from simple playing personnel into high-yield, self-sustaining global brands that function at a sovereign scale level. By learning how to systematically weaponize their massive cultural influence, elite figures are capturing multi-million-dollar off-field revenue streams that operate with zero vertical limits. Understanding the exact corporate mechanisms behind modern endorsement deals reveals how fleeting athletic fame is successfully converted into permanent, multi-generational financial empires. To understand why endorsement deals have become the primary engine for massive wealth accumulation, one must look at how modern corporations calculate the value of consumer attention. In a hyper-fragmented digital world where consumers can easily skip standard internet ads and ignore traditional television commercials, an elite athlete represents the ultimate vehicle for brand saturation. An athlete commands an intensely loyal global consumer base that spans across continents and digital platforms. Corporations do not hand out multi-million-dollar endorsement contracts out of simple admiration for athletic skill. They are executing cold, data-driven financial transactions to purchase a direct, high-trust gateway into the global consumer marketplace. This structural alignment allows the athlete to shift their earning power completely away from physical labor, turning their public image into a highly leveraged corporate asset that accumulates wealth around the clock. Shifting the paradigm from cash retainers to long-term equity valuation. The earliest iterations of sports endorsement contracts were purely transactional, flat-fee agreements where an athlete received a fixed cash payout to wear a specific pair of sneakers or appear in a regional magazine advertisement. Once the campaign ended or the contract term expired, the financial relationship ceased, leaving 100% of the accumulated brand value and long-term enterprise growth in the hands of the corporate entity. Modern financial management groups representing top-tier athletes have completely discarded this limited structure, completely shifting the industry benchmark toward equity ownership, gross revenue royalty sharing, and long-term corporate joint ventures. This equity-driven wealth strategy creates an incredible compounding multiplication effect on an individual's personal net worth. Instead of absorbing a massive upfront cash payment that is instantly hit with peak personal income tax rates, the athlete demands direct stock options, equity stakes in the parent company, or a permanent percentage of gross sales from specific international product lines. This means that as the corporate entity scales its global footprint, expands its market share, or undergoes a massive public stock offering, the athlete's private investment portfolio skyrockets, completely independent of their daily athletic performance. By ensuring they own a direct piece of the corporate machine they are helping to build, the athlete effectively captures permanent enterprise value that continues to generate high-margin cash flow for generations. Monetizing global attention through automated multi-platform syndication. A premium athlete operating in the modern economy functions as a decentralized media broadcasting network, commanding an audience asset base that often exceeds the viewership of traditional television channels. When a global sports star posts a single piece of content, wears a specific luxury watch during an international press conference, or integrates a product into their daily training routine, they are generating billions of immediate, high-value consumer impressions. Corporate marketing divisions evaluate this reach using highly advanced media value formulas, analyzing verified user engagement rates, demographic profiles, and direct consumer conversion metrics to justify paying massive multi-million-dollar retainer fees. This direct-to-consumer syndication framework grants the athlete incredible economic leverage during high-level corporate negotiations. Because they control their own distribution channels through their massive personal social media feeds, they no longer rely on traditional sports media networks or team public relations departments to communicate with the world. They can dictate exactly how a corporate sponsor's message is woven authentically into their lifestyle, maximizing consumer trust and driving massive retail sales volume at an accelerated pace. This level of automated marketing reach turns the athlete into an invaluable corporate partner, allowing them to extract continuous, premium revenue out of the global attention grid without ever increasing their physical operational overhead on the pitch. Constructing lifetime intellectual property systems and corporate walls. The definitive pinnacle of the endorsement wealth strategy relies on the systematic construction of a lifetime intellectual property system that operates completely independent of any single playing career or team association. Elite superstars build independent, specialized brand names, logos, and custom product designs under their own name, legally fortifying these commercial assets through strict international trademark registries. Rather than operating as a temporary spokesperson for an outside company, the athlete positions their proprietary brand name as a standalone lifestyle entity, allowing them to license their intellectual property to multinational manufacturers across diverse retail categories spanning from luxury apparel to electronic consumer goods. To manage the massive capital inflows generated by these lifetime brand frameworks, athletes utilize private family holding funds, highly structured asset trusts, and independent fiduciary oversight boards. All incoming endorsement revenue, international licensing fees, and product royalty payouts are funneled straight into these private corporate holding structures to shield the capital from extreme fiscal liabilities and optimize investment distributions. This strategic structural setup allows the athlete's financial advisors to instantly redirect liquid sponsorship profits into stable, high-yield asset classes, including prime commercial real estate networks, global venture capital startups, and diversified private equity markets across the globe. By transforming fleeting athletic fame into a permanent corporate machine, modern sports figures ensure that their commercial sponsorship deals serve as a primary foundational engine for generational financial empires. The transition from a physical athlete to a corporate brand holding entity allows them to navigate the global economy with maximum leverage, ensuring that their earning power remains completely decoupled from any single product lifecycle or injury risk. This advanced framework proves that when a sports icon massively capitalizes on their global attention asset, they can permanently rewrite the rules of wealth accumulation, converting short-term on-field domination into decades of sovereign financial freedom. Building a highly strategic approach to capturing global attention, securing consistent cash flow pipelines, and scaling monetization systems is the ultimate secret to surviving in the modern hyper-competitive sports and entertainment economy. If you want to keep discovering how elite sports franchises, corporate entertainment networks, and top-tier digital creators build, protect, and scale their wealth networks across the global attention grid, make sure to hit the like button on this video and subscribe to the channel right now so you never miss our next deep dive into the business models of the world's most lucrative industries.